Welcome to Slay the Spider. Standard & Poor's depository receipts are the world's largest traded equity securities. They are called spiders. By purchasing one spider, you own a tiny piece of all 500 companies in the S&P 500. Our objective is to beat the performance of the stock market while reducing risk. That is how to slay the spider. In the next few minutes, we will teach you how the stock market actually works. Then we will teach you how it can make you very wealthy over the next 18 years. The secret to successful investing is understanding what will happen next, then buying those companies selling the products and services that tens of millions of people will be buying next, then selling for a profit. The stock market truly is just a reflection of life in America. To understand the stock market, you need to combine three pieces of information. First, a 120-year chart of the market since 1896. The market over the past 120 years is a pattern of steps and rises, alternating about every 17.5 years. There is a reason this stair-step pattern exists and will continue into the future. The next rise begins in 2019, this year. It will be the only major rise during your working life. You only get one shot at taking full advantage of the stock market. You cannot afford to miss it because the next rise won't start until the mid-2050s. Here is why that stair-step exists. Second piece of information. We all go through 5 stages in our lives. The stages are kids, young adults, building a family, empty nest, and retired. What is important about these stages is that we spend and save differently in each stage. We eat at different restaurants, we shop at different stores, we drive different vehicles. Our entire working life is building a family and empty nest combined. That is when we earn virtually all our income. The third piece of information: how many people are born each year. This is a chart of the births in the U.S. each year. It is shaped like your hands. This is the baby boomers. This is the kids of the baby boomers, the echo boomers. There are 78 million baby boomers, 84 million echo boomers. There were 5,000 babies a day being born in 1945 at the start of the boomers, 12,000 a day by 1960. Then declining back to 6,000 a day by 1973, 78 million total. Babies do 3 things. They eat, sleep, and poo. What was the hottest stock in the stock market in the 1950s when tens of millions of baby boomers were born? If you said Gerber, you are correct. Huggies and Pampers were not invented until later. Gerber stock soared as they built factories, hired employees, and fed those 78 million babies. Then the birth rate dropped to 6,000 babies a day. What do you think happened to Gerber? They closed factories, laid off employees, and nearly went bankrupt. That's simply just the business cycle. Now, let's move to the next life stage, young adult. What changed in your life when you were 16? A driver's license? Let's move the chart over 16 years to 1961, when 5,000 kids a day were getting driver's licenses, going to 12,000 a day, 78 million total. What were the hottest stocks of the 1960s? That's right, General Motors and Ford. Next stage, building a family. We want a roof over our heads to protect our families. Shift the chart 28 years to 1973, when 5,000 boomers a day were building their families, rising to 12,000 a day, 78 million total. What were the hot stocks of the 1970s? Home builders, Weyerhaeuser lumber, Whirlpool appliances, lawnmowers, everything associated with building a family. You get the idea. Now, back to the 120-year log chart of the stock market. The reason this stair-step pattern exists and will continue in the future is that it represents the vast majority of the income in the U.S. The flats in the market occur when a generation is building a family. The rises occur when a generation is becoming empty nesters. In the last rise, the market doubled 4 times, starting at Dow 777 in August 1982, 1550, 3100, 6200, 12,400. On December 24, 2018, the Dow bottomed at 21,000. 4 doubles would be 42,000, 84,000, 168,000, 336,000. Wow! Dow 330,000. 4 doubles. That is huge. $1 becomes $16. $30,000 becomes $500,000. $500,000. That is what you can expect the market and spiders to do over the next 17 years. So where are we today and going forward? The echo boomers are beginning their empty nest phase in 2019. The rise has started. That is our only concern as investors. In this video and on our website, we begin investing using spiders, the S&P 500 index. Over the next 17 and a half years, you can reasonably expect $30,000 to become $500,000. The S&P 500 is made up of 11 sectors. The sectors in red are more dominant during the build-a-family life stage. The sectors in green are more dominant during the empty nest life stage. Since we are entering a 17-year empty nest rise, a less risky portfolio would have us own only these sectors. By making this one alteration, you can expect that $30,000 to become $1,500,000 instead. Sure beats $500,000. Now, go to our website. We are taking it 2 steps further. Then $30,000 turns into $3 million. Sure beats $500,000. And that is how to slay the spider. We provide all this information on our website, how to do it, and free of charge. We will prove it's really true month by month.